Hi everyone, welcome back to Billy's podcast. So this session is going to be the comparison about Bajaj Finance and Bajaj Finserv. So we all know that Bajaj Finance is a subsidiary of Bajaj Finserv, but when we look at the market cap of Bajaj Finance, it is above 4 trillion Indian rupees. Whereas if you see the market cap of Bajaj Finserv, it is above 2.5 trillion Indian rupees. So how can a subsidiary can have more market cap than the parent company?
What do you think, first of all, market capitalization is?
The amount of business they do when compared with
What is market capitalization?
yes, sir, that business will have a value in the market, and that company how much ever business they do, that is called market cap. Okay.
No.
Okay.
Fine. That's why you're confused. Because what you're looking at is, you're looking at thinking, here is Bajaj Finserv doing so much of business, making so much of money, right? And it's valued at this much. And you're assuming market capitalization is the amount of business it's doing. Well, that's why you're wrong. Market capitalization has got nothing to do with what you just said. Market capitalization is the stock price times the total number of shares which are there.
Yes, sir.
So it is how much the investors are valuing the company. So market capitalization of Bajaj Finserv can drop today to zero if the share price of Bajaj Finserv becomes zero.
Okay.
You understood? That is what is market capitalization. So you're saying Bajaj Finserv is valued less than Bajaj Finance. This kind of things exist in market where investors, especially institutional investors and FIIs, get stuck in a silo. Okay, and they're only looking like this. This happens even with Mahindra. It was a tractor company, but Mahindra is also the holding company. If you look at it, because Mahindra owns Tech Mahindra. So for a long time, when you buy Mahindra, you're also buying Tech Mahindra. It's like buying Warren Buffett's Berkshire Hathaway. When you buy Berkshire, you're buying Apple. Not only buying Apple, every company he's invested in, you're buying that. So this is true for when you buy any holding company. Like we buy Tata and Sons is not traded, but any Tata holding company you buy, it will have all the Tata companies in it. So same way, if you're interested in buying Bajaj Finance Limited and you feel Bajaj Finance Limited is overvalued and it's very expensive, then you can analyze Bajaj Finserv Limited and see is Bajaj Finserv Limited at a better PE ratio. So for example, let me open screener here. Bajaj Finance Limited, and if you look at its book value, it's 1,234, right? And the stock is at a 30.5 PE. And if you take the mean PE over 10 years time, it has always been trading at 45.9. So is that considered undervalue or more value? Is something for you to think about. While Bajaj Finserv, the parent company, it's trading at 30.95 PE. Okay, now it's gone to 31. And it's only 1,583. Right? But this company, Bajaj Finserv, owns 52% of Bajaj Finance Limited. So Bajaj Finance Limited, 7,000 rupees might be too much for you. And this is also, if you look at 10-year PE, it's at 33.8 and it's at 31. It's slightly below what it would be below its average. Right? 10-year average is 33.8 and right now it's 31. So it's slightly below its usual place where it sits at. So it's below the mean. So you can consider that if you can't afford to buy Bajaj Finance Limited, which is at 7,000, and it's trading at 45, which is its average 10-year spread, and it's trading at 30. But usually finance companies, we don't look at price to earnings. Because for a finance company, its asset is its book value. So we tend to look at book value. So if you look at Bajaj Finance, okay, as a finance company, like a bank, because you should be comparing it to a bank because it's basically doing only lending money in, right? So if you look at it like that, Bajaj Finance, its at price to book is at 5.76.
Okay.
So that is very expensive if you look at its peers. So this is the way you can analyze it. But then again, you have to think of buying and holding for a period of 10 years. And also look at Tiffin Coffee range, right? You're looking at Tiffin Coffee range and you're looking at affordability. Most of our viewers who are watching this, right, cannot afford to buy either of those because both of them are not at Tiffin Coffee range. And the market is not in a position where you can go drop, full day allowance.
Yeah.
Okay, I'm saying 1,500 rupees, let's say, is your breakfast, lunch, dinner allowance. You can't even go look at that right now. We're not at that range. So, and if you have so much of money where you can afford to invest 2,000 rupees today, right? There are better options for you to explore. But in terms of market capitalization, it's not a metric to measure to invest. You can't compare market capitalization of a company to invest.
Okay.
That was a mistake you were making.
No,
So
just
you
curious
were
to know
astonished.
how can a subsidiary can
Yeah.
have more market cap than
Yeah,
the parent.
because market capitalization has got nothing to do with subsidiary parent and all that. It's got to do with how much the price of a share is multiplied into the number of shares. That is its market capitalization.
Okay.
It's capital. Capital is fulus, money. So according to market, how much money does the company have?
Okay.
It's a very fancy way of thinking. Looking at you, you're trying to guess my weight. Sir, நீங்க பார்க்கறது ஒரு 100 kilos மேல இருப்பீங்க. Rupesh might walk and say, Sir, நீங்க பார்க்கறது 120 இருப்பீங்க. But my true weight, only I know.
Yeah.
So same way, the true thing is only knows the company knows the value, which is the book value. What the company is putting its audited book value is actual value. But then again, all these things are only metrics. You can use this to get a feel, but then you have to think what's going to happen in 10 years. Which companies do you think, according to my risk, will grow enough for me to give returns for the money I'm putting? Like I said, we're all investing with a specific goal in mind. So all these companies you pick should align with your goal. Okay. In intellectual term, it's nice to think market capitalization, what it is. But because you're thinking what the definition of market capitalization you got wrong, you're astonished. You're like, how can the father be valued less than the son when the son is owned by the father?
Yeah.
Okay.
So I hope that this video is informative and you had some knowledge about market capitalization. So if you found this video interesting, please share it with your friends and subscribe to this channel for more videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.